Hello, good morning. Today I'm going to talk about five icons of finance. Thank you very much for your time. If you pay attention for next 10 to 15 minutes, I'm pretty sure you will get some good knowledge today. I'm pretty sure your time will be valuable and you will get something new. So let's go through together. Are you ready? Right. So there is two way we can start saving the money. One is traditional way of saving, where we go to work, make money. First of all, we pay the bills and we try to save the remainings. But what is the problem is we make more money, we spend more money. So we don't save much. Why we go to the work and make money? Technically, we go to the work and make money for us and for our family, right? But are we saving enough? Maybe yes, maybe not, right? So what is a new way or a smart way of saving money is we go to the work, make money first, we pay ourselves, means save first, then we pay the bills. How much to save is minimum 10% to start, then slowly we can increase. So make money, save ourselves first for 10%, then we pay the bills, then we spend the money in other things which we need for day-to-day life. So now let's understand the debt. What do you think? Is debt going up or going down? So there's two type of debt. One is country debt and another is a family debt, right? So technically both debt are going up, right? So let's see, there is control, uncontrol, or good debt, bad debt. So what is control means something you are aware of it and you can control the things and you will be paid out those debts in certain time. That is called the control. But what is uncontrolled is something that you know you don't know how much and it's out of your budget and that debt is pulling you down. That is called the uncontrolled debt. So good debt again is something like mortgage. So you know how much you're paying and you know when it's gonna get off or when you paid off that mortgage. That is called the good debt. And what is bad debt is sometime we don't have money but we need to buy the stuff. So what are you going to do is we use a credit card. When you use a credit card, what are you going to do? We pay the interest for 15, 20%, right? So if we pay the interest for 15, 20%, those financial institutions become rich. So we always stay the broke, right? That's called the bad debt. So here's the thing, either I have a good debt or bad debt. If I pass away, my debt does not die with me. So someone need to pay my debt because I have a house, I have a car, I have a bank balance. Someone need to pay it, right? So what I need to do is I need to protect those debt. How to protect? Buy the life insurance. How much life insurance? Whatever is the debt. So for example, if I have 500,000 mortgage left, I can buy the life insurance of 500,000. For how many years? Whatever the year I have a debt. So if I have a plan to pay those debt in 20 years, so I can buy the insurance for 20 years, 25 years for 25 years. So the next thing is cover the active income. I go to the work, money comes to the family, then we pay the bills, right? But in case if I cannot go to the work, what happened to my family? Where the money comes? If money is not coming to the family, what happened next, right? So how my family gonna survive? That is the question, right? $1 million question. That means I need to cover the income. How much? At least 10 years of the income. So look at here, if I have a 500,000 mortgage, we're gonna put 500,000 here. And the cover income, if I make 50,000 per year, multiply 10 means another 500,000, right? So total the $1 million. If in case I pass away, all my debt is paid up and money, another 500,000 money is there so that my family can continue their lifestyle. So the third one is, critical illness coverage. So we are lucky that in Canada, if, for example, if I get heart attack or a stroke, if I admitted to the hospital for 3 months or 6 months, number one, my income is stopped. Number two, I want my wife or spouse or kids to come to the hospital and stay with me, take care of me, right? So in that condition, their income also is stopped. So we are lucky that we don't need to pay the hospital bill. But what about our mortgage? What about our rent? What about our grocery, our parking, our insurance, our hydro bills, right? Who gonna pay for that? So we need to prepare those. So critical illness coverage provides you the money so that in case I'm admitted to the hospital, happen those 25 major illnesses, Then they pay the money, they give the money. And how much we need to buy critical illness coverage? At least 1 year of the income or 2 year of the income. So now next, move forward to the next is a disability insurance. So if I go to the work, I make money. Money comes to my home, right? But if I fall and sleep, break my arm and cannot go to the work, what happened to me? How money comes to my family? So the disability insurance gives the money flow to my family in case I'm disabled. They keep paying me until I go back to the work. So now, Mr. Klein, look here. This is one coverage. This is the another coverage, and this is the another coverage. There is 3 coverage. Let me ask you the question. Which one is not important to you and your family? Which one is not important? This one, or this one? Or if that is all important, right? So now let's move forward. So retirement planning. So for example, if we all retire today, do you know how much CPP government benefit we get? It's not enough, right? So it's not enough. That's why there are so many investment vehicles developed there. Who developed those vehicles like TFSCs, the RSPs, the FHSC? The federal government, right? So they developed those vehicles because, they know that the retirement planning is not enough. So the question is, how many of us are really utilizing, implementing those investment vehicle, investing our money and growing money 10, 15, 20% potentially rate of return so that we can implement this in our retirement? How many of us are doing it? The next one is we believe that our children will have a better lifestyle in this country compared to us. We believe that. What about you? If you believe that, we can plan for your children, and there's different way we can plan. We can plan under the RESP programs for the higher education. You can plan under the secure the health with accumulation of the wealth. There is certain programs where your child get insured from day one, plus they are building the wealth where they can use for the first time home buyer, the car, the marriage, whatever purposes they need. And you know what? The good thing is the government is giving them money for this. We can invest those money for our children, for their future. And the last thing is whatever we have on, in our lifetime, our house, the bank balance, whatever wealth, from here to we have on, in case I pass away, we want to make sure that our children or our family gets everything what I have with number one, with less tax. Number two is no legal hassle. This is how I want to transfer my wealth, everything to my children or my spouse, right? For that, in Canada, this country is run by rule and regulation. We need to do some of the paperwork. We call it wills, healthcare directives, enduring power of attorneys, and we need to plan for generational wealth transfer. When the money moves from this generation to next generation, there is a tax consequences. So we need to plan today in order to avoid those things, those circumstances. So let me ask you, if you want to transfer everything to next generation, less legal hassle, no legal hassle and less tax, then we need to plan from today. Sounds good? So out of that, let me summarize what we have gone through is, in summary, when we are building the financial house, the foundation is the protection is the foundation. The second thing is we work out on the debt elimination. If there's bad debt, we work out to eliminate those things. The third thing is investment savings for the retirement and dreams and goals. So if you have a plan to buy the second house, the vacation house, vacation boat, whatever, then we start investing savings for your dreams and goals. Let me ask you the questions. Are you ready to start the foundation? If you are ready, let's move forward. And in order to move forward from here, I need to collect some of your personal information, which will be protected by law. And I'll find the best suitable plan for you to implement, to make a strategy. Then we can move forward from here. Sounds good? Thank you very much. Let's move forward.